And Carroll, hello.
Hello, Jade.
We're going to start with in the UK, where the French oil company Total is investing in extracting shale gas.
Yeah, that's right. Total is going to be the first of the major oil companies to invest in shale gas exploration in the United Kingdom. The company's taking a 40% stake in 2 exploration licences in the east of the country. It's going to be an investment of around €36 million, and it's seen as a major vote of confidence in the UK's shale gas industry. Jonathan Crane has the story.
Stealing a march on its rivals, Total will invest €36 million as part of a deal to buy a 40% stake in 2 shale gas exploration licences in central England. The deal provides a boost to the UK's fledgling shale industry, a priority for the coalition government, which on Monday announced tax benefits for local authorities that encourage drilling.
That's why we're going all out for shale. It will mean more jobs and opportunities for people and economic security for our country.
Cameron's keen to exploit the advantages of shale gas, which has transformed the energy sector in the United States by increasing competition and driving down prices. The British Prime Minister is pushing on with plans despite protests by some local groups, who argue the process to extract shale gas, fracking, is harmful to the environment. Those concerns have led to some countries, such as France and Bulgaria, banning shale production outright. Others, like Germany and the Netherlands, are still deciding how to proceed. Although Total's investment is a drop in the ocean, it sets the French giant apart from other major oil companies, which have so far taken a cautious approach to European shale gas.
All right, Stephen, how have the markets started off this week then?
Well, trading's just begun in Europe. A broadly positive picture across the board here in Europe. Over in London, the British department store chain Debenhams, their shares are up over 5% after news that the retailer Sports Direct has acquired a 4.6% stake in the company. Debenhams has been in trouble in recent times, reporting poor pre-Christmas sales. Over in Asia, those disappointing figures out of the United States on Friday on jobs didn't dampen the Asian markets too much. No trading in Japan. The Nikkei is closed. And in China, the delay over the flotation of 5 companies on the stock exchange had sent given investors a little bit of concern. The Shanghai Composite there, as you can see, down 0.2%.
OK, we're going to go back to some news here in France now. And another day, another strike, it seems.
Yes, indeed. Taxi drivers on strike, not normally headline news here in France, but this particular demonstration is over a very particular issue. It's to do with what's known as tourism vehicles here in France. These are private hire car services, the likes of the American-based service Uber being one of them. Taxi drivers say that this is causing them unknown headaches. It's giving them, creating stiff competition for their business, and they're already suffering because of things like tax increases. Here's what one of the union leaders had to say at the Paris airport Charles de Gaulle this morning.
First of all, we want the cancellation of the increase in value-added tax on transport, which hits taxis. And we also want laws and obligations on these tourism vehicles, and in particular, checks and regulation of this profession.
Let's move on now with a look at some of the day's companies' news. And the German car maker Volkswagen is to invest $7 billion in its North American operations over the next 5 years. The company is to launch a new mid-size SUV model to cater to the US market. It's aiming to sell 1 million VW and Audi cars in the United States by 2018, almost double its figures for last year. Reports in the French media say Samsung is preparing to invest in the French online music service Deezer. The rival to Spotify, created in 2006, has more than 12 million users worldwide. The news comes after the French Digital Economy Minister Fleur Pellerin attended the Consumer Electronics Show in Las Vegas last week in an effort to boost partnerships with French companies. And after the controversy over the golden parachute for outgoing Peugeot Citroën boss Philippe Varin, France's business lobby has published its recommendations on executive pay. MEDEF says that shareholders should have a vote on how much bosses of companies are paid. The idea is to introduce transparency to the area. The vote won't have any mandatory effect on their pay packets.
Finally, some more sad news for the music industry, it seems. The world's largest music shop has closed its stores in London.
Yeah, that's right. The HMV store at 150 Oxford Street was the largest music store in the world until it closed on Sunday. It was opened back in 1986 by Bob Geldof from the Boomtown Rats. The HMV, of course, has been quite hard hit by the recent fall in sales we've seen on the UK high street. These are some of the tweets the company posted yesterday with photos from inside the store just before its last days. It was known for its vinyl collection that you can see there. Now, this is, of course, part of a greater trend. HMV had its own financial difficulties last year. It was rescued from administration, but with that brought 141 store closures and the loss of 2,500 jobs, but also the end of an era on London Oxford Street.
Definitely is. All right, thanks for that wrap up of the business news, Stephen Carroll.